It's another day, another opportunity to hold business conversations on Business Morning here on Channels Television. You're welcome. I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for joining us. Let's take a look at what's happening in the oil market now. Oil prices steady today after 4 days of declines, with investors still wary about prospects for stronger fuel demand as the use of rail, air, and other forms of transport remained constrained amid surging COVID-19 cases worldwide. Brent crude was up 23 cents at $69.26 a barrel, while U.S. West Texas Intermediate crude futures gained 24 cents to $66.83 a barrel. India, the world's third biggest crude importer, also started sales of oil to state-run refineries from its strategic petroleum reserve, putting in practice a new policy to commercialize federal storage by leasing out space. In the United States, more supply is set to hit the markets if official forecasts prove right. Crude and gasoline inventories in the United States are expected to have fallen last week, while distillate stockpiles are likely to have risen for a third straight week.
And here in Nigeria, the Central Bank of Nigeria has warned that abusers of the NAIRA at social events risk imprisonment or an imposition of fine. According to the bank's 2007 amended act, spraying or dancing or marching on the NAIRA or any note issued by the bank during social occasion or otherwise, howsoever, shall constitute an abuse and defacing of the NAIRA or such note and shall be punishable under the law by fines or imprisonment or both. Also, the CBN has reportedly secured an order to freeze bank accounts of fintech and investment platforms, Bamboo, RiseVest, Trove, and Chaka, and this hold on the accounts will last for 180 days. Well, the CBN is alleging that they are engaged in illegal foreign exchange transactions, accessing, procuring of foreign exchange via their banks from the Nigerian foreign exchange market, where several Bureau de Change international money transfer operators and have transferred cash deposits of more than $10,000 to various accounts overseas, contrary to provision of extant laws and regulations, and also traded in foreign securities and cryptocurrencies in contravention to CBN. Meanwhile, two of the affected fintech companies have reacted to the freeze order. According to them, their team and government are looking into the matter. They also assure that investment and operations are safe.
Well, I guess some investors won't be happy with this news.
Yes, it's a scary one.
It's
for
quite
a lot of
scary,
people
yeah.
who have seen that as another means of earning a living.
Exactly, investing in international stocks and all of that.
Yeah.
So the concern now is what happens to their investment. So,
well, let's hope that, as the order says, is for 180 days,
right,
to allow for investigations.
So
and
let the matter be settled.
Exactly,
hopefully.
Yeah, because I mean, people are looking for means to just
make an end.
Yes.
Exactly. Well, Unity Bank, in conjunction with the National Youth Service Corps, NYC, has held its competition amongst corpers in 10 states of the country in an empowerment challenge targeted at co-preneurship. The Co-preneurship Challenge is the bank's entrepreneurial development initiative that debuted in 2019 and is essentially a business plan competition where contestants bring up their business plans on business ideas and assessed on originality, marketability, future employment potential, and knowledge of the products. You take a listen.
The Copreneurship Challenge is Unity's bank's entrepreneurial program, which is targeted at serving coppers with business ideas and also drive job creation amongst young people.
So it wasn't your idea.
With the rising rate of youth unemployment in the country, the Copreneurship Challenge is considered an alternative by Unity Bank to assist coppers not only with money, but with proper business expertise.
We're giving them not just money, but we're also giving them financial advice, managerial support, as it were. So the plan is to support them to start their own businesses, incorporate, and after their NYC camp, we would even continue supporting them going forward.
As the youth corpers are going into the labor market presently, not all of them will be able to get jobs through the government or any processors. But with what Unity Bank is doing right now, Unity Bank will support them so that they can stand on their own and even be employees, not an employee.
No fewer than 10 people pitched their business plan as the best 3 coppers emerged as winners, with second runner-up winning 200,000 naira, first runner-up 300, and overall winner goes home with the grand prize of 500,000 naira. Winners of the challenge in Kano and Enugu believe the program is life transforming.
I'm very happy I won. So I'm really excited and happy at the same time.
Thank you very much, Unity Bank. Thank you.
Coordinators of the NYSC orientation camps, where the initiative was held, described the program as developmental for the coppers.
It's a way that they have built to encourage young entrepreneurs to build capacity and also be employers of labor and creators of wealth. And this has gone a long way to encourage core members in this field.
Unity Bank hopes to sustain the program for the foreseeable future to enable more graduates become employers of labor.
Nigeria's headline inflation dropped to 17.38% year-on-year in July from 17.75% in June, marking the 4th consecutive monthly decline. Latest data from the National Bureau of Statistics shows that food index also fell to 21.03% in July, while core inflation rose by 13.72% from 13.09% recorded in June. At the same time, urban inflation rate declined to 18.01% in July from 18.35% recorded in June, while rural inflation rate decreased to 16.75%. All items inflation year-on-year was highest in Kogi, Bauchi, and Kaduna, while Akwa Ibom, Rivers, Delta, Kwara states recorded the lowest increase last month. Well, we have Damilare Ashimiyu, a senior analyst at AfriInvest Securities, joining us now to discuss the factors behind this inflation figure, the decrease, and all other things we need to know. Hello, Damilare. Good to have you. Good morning.
Good morning.
Good morning. Well, you saw the inflation figures. What were your first thoughts?
Yeah, thank you very much. Well, we saw this decline coming, although the level of moderation we had came in stronger than our projection. We actually projected the moderation to about 17.56, but seeing that the moderation came to about 17.38 was a very surprising one, given the fact that in the real sense, prices of food items are not really moderated in real time. Now, why we actually expect the headline inflation to moderate in the first instance is because from our simulation of what we expect the NDS to release, we saw that there is still high base year effects on food prices. And given the fact that food prices accounted for more than 50% of the CPI basket, we saw that as of July last year, between June and July last year, food prices rose by 31 basis points to about 15.48, which was significant. We know fully well that in July this year, given the fact that, yes, prices have increased, but not as strong as that level, we believe that base effect will play a major factor. And also, July marked the beginning of the harvest season for some notable crops, such as corn and sorghum, and that also played a part in the moderation of the prices of those commodities in July. I mean, corn before July was trading around $649 per bushel, but it fell to $540 or so in July. So all these factors play in, in the trend we saw for the year-on-year moderation. And like I mentioned, because food accounted for more than 50%, so it was able to weigh down. However, on the core inflation subcomponent, because the headline inflation is made of 2 components, the core inflation as well as the food inflation. Core inflation rose both month-on-month and year-on-year. Year-on-year rose to 30.72, about 63 basis points increase, while month-on-month also rose about 49 basis points to 1.3. The driver of the core inflation is actually not far-fetched. If you look at it on year-on-year basis, as of this time of last year, Nigeria official exchange rate was 3.60 to $1. as of today, the official exchange rate is around 411. So that means if I'm a company and I need to import raw material or I need to import a machinery to produce my goods or services, I will need to give out more Naira value to get a single unit of $1, which then means my price is on the rise, and also I will have to push that to final consumer. So if you look at the dynamics of items that are not farm produce, and given the fact that Nigerians do import a lot, I mean, our monthly import bill is estimated at about $4.5 billion. So given the fact that our currency has seen recent pressure, I mean, you don't expect anything other than this, the trend we saw in core inflation. So it's a mixed bag. Yes, the headline inflation moderated just because there's a base effect on food prices. But for the core items, I mean, which affect things like education, transportation, health, traveling, and stuff like that, the recent pressure on the Naira drove an increase in core inflation.
All right. On a global scale now, the Food and Agriculture Organization of the United Nations earlier reported that average global food price index moderated in July 2021 to 123.0 index points. Is there any nexus between this and the latest decline witnessed in domestic food inflation?
Well, naturally, there was supposed to be a nexus between this because imported food inflation accounts for about 13% of our CPI basket. However, the gains that we would have enjoyed from the decline in global food prices, have been completely eroded from our own analysis by the recent pressure on the Naira. And from what we observed, we noticed that imported food inflation stood at 1.3 in June, and that was the same reading that of July also delivered, though there is a slight decrease of about 1 basis point. We have 1.34 in June, 1.33 in July. So it's like there's really no difference. And why these gains from the reduction in global food prices? Because the food basket that the FAO is actually considering consists of cereals, consists of dairies, consists of meat, consists of sugar importation. Though sugar prices was up, meat was up, but dairy was down, cereals was down, as well as beverages. But why we could not get much benefit from this is the fact that late in May, the CBN adopted a new official exchange rate of 4.10. So between May and now, we've seen significant pressure on the Naira. So around that time when that decision was made or when that policy was adopted, in the secondary market, FX exchange rate rose to about 505. So importers of these food items had to pay more to get dollars. And in about 4 weeks ago, we all remember that the CBN also came out to ban FX supply to bureau de change operators, so which also further put pressure on the Naira value in the secondary market. Currently now, though we are beginning to see some level of stability, but again, the Naira and the parallel market exchanged for 515. So that means in the last 4 weeks, even in the parallel market, the Naira has lost an extra 10 Naira. So which then means that even though prices of food item in the global economy might have moderated, from which Nigeria imports some of them, I mean, some canned food, even some raw agricultural product, we do import it. So the exchange rate effect has actually neutralized this gain, and we are not really having the effect. So basically what actually drove this moderation is mainly base year effect on food prices.
All right, so with this tapering of the inflation now, how is this supposed to affect the average Nigerian, seeing that transport fare, and prices have not really declined?
Yeah, the recent moderation we witnessed in the headline inflation is actually not broad-based. Not broad-based in the sense that, yes, we saw moderation in food inflation driving the headline down, but core inflation is still up, which reflects the fact that prices of automobile spare parts are still high. Prices of health services rose faster than the prior month. Prices of education and every other items that does not relate directly to farm produce. So that means even if prices of farm produce reduced by, let's say, a hinge of a Naira, I mean, the fact that there's still pressure on transportation, yes, not because fuel prices have increased. I mean, the government still subsidizing PMS, but I mean, what makes a vehicle to run on the road is not only PMS. I mean, the parts are on the increase because we import, this spare part from abroad, given the fact that our exchange rate has weakened. So invariably, a layman, so to say, will not really benefit from this so-called moderation inflation because it's more of a mathematical thing than something that the effect can really be felt, because the moderation that is coming from food, based on the fact that we are in the harvest season as well as base effect, is being eroded by the pressure from other segments of the economy. So it would, will require a broad-based moderation on the two subcomponents of inflation for it to really have impact on an average layman. So when NAIRA, if the NAIRA can appreciate such that an importer of a commodity will not need to spend more in terms of NAIRA to get $1 to import, that's when we'll now see the impact of the moderation in inflation touching the life of an average person and everything coming down to where every Nigerian wants it.
All right, that would be great to see. But shifting attention now to fiscal policy, the Minister of Finance, Budget and National Planning, Zainab Ahmed, hinted Monday that the federal government will borrow $4.89 trillion in 2022 to fund a projected deficit of the proposed budget of $13.98 trillion. What are your views on the performance of the current 2021 budget?
Yes, based on the 5-month budget performance report from the Federal Ministry of Budget and National Planning, I think the 2021 budget have suffered some level of setback. And I'm speaking from the point of revenue, because from the data we saw, prorated revenue for the 5 months underperformed by about 44.6%. Nigeria was only able to get revenue of about 1.8 trillion, as against the target of about 3.3 trillion. Whereas over the period, recurrent expenditure settled about 4.8 trillion, although the projected recurrent was about 5.7. So yes, recurrent was, was not matched by about 15%. But if you look at the recurrent that was even incurred over that period, that's 4.8 trillion. That's like 3 times of the revenue. So in the first 5 months of this year, I would say the outlook on the budget performance is not really encouraging, because out of the 3 broad category of revenue sources of the government, it was only non-revenue that came close to meeting its prorated target by about 99.7%. Oil revenue underperformed by 50%. Independent revenue, yes, outperformed by 10%. But if you look at independent revenue as a component of other source of revenue other than oil and non-oil, they jointly underperformed by about whopping 73%. And this other source of revenue is where the federal government is expected to get about 4 trillion plus, to meet up its revenue target of 7.99 trillion. So basically on the revenue side, especially for oil and other revenue sources aside the non-oil, is not looking good for the country. It's creating an increase in budget deficit, which may actually push the actual deficit for this year to more than 8 trillion compared to the budgeted deficit of about 5.8 trillion.
All right, thank you so much. I will have to end it there now. Damilare Ashimiyu, Senior Analyst, AfriInvest Securities. Thank you for your time on Biz this morning.
Thanks for having me.
All right, so AFEX Commodity Market Update is next after the break. Do stay with us.
Well, unlike last week, deals at AFEX Commodities Market declined in the week ended August the 16th. A minimal decline, though, and Michael is joining us now. He always has the details and much, much more. Hello, Michael.
Hi, Ini. Good morning. It is always a pleasure to be here. So just to give you a summary of everything that has happened on the exchange in the week under consideration, the total value of transactions traded on the exchange went up by 153.85%, going up from 0.13 billion to close the trading week at 0.33 billion. The total number of contracts traded on the exchange also went up by 84.43% from 3,788 contracts to close the trading week at 6,986 contracts. The number of deals, however, saw a bit of red, falling by 2.78% from 36 deals to close the trading week at 35 deals. The AFEX Commodities Index, which is the ACI, also fell by 3.64% from 459.22 points to 442.50 points. The AFEX Export Index also fell by 4.05% from 176.61 points to close the trading week at 170.50 points. With regards to the volume of contracts traded on the exchange, we generally saw a higher volume of transactions on the exchange, with the greatest changes coming with Cashew, which traded 10 contracts last week to trading 5,290 contracts this week. And secondly, with Cocoa, which traded no contract last week to trading 910 contracts this week. With regards to the price changes on the exchange, we essentially saw changes across three commodities. The first of which would be maize, which went up by 4.56%, gaining 1,034 naira in the contract value to close the trading week at 23,710 naira per contract. We also saw an increase in cocoa, which went up by 5.29%, gaining 4,809 naira in the contract value to close the trading week at 96,309 naira per contract. And last week, in regards to price changes, we saw a decline in the price of soybean, which went down by 4.48%, losing 1,571 naira in the contract value to close the trading week at 33,512 naira per contract. And last but certainly not least, we have the fair trade exchange traded commodity, which also went up by 4.56%, gaining 724 naira in the contract value to close the trading week at 16,597 naira per contract. And as we always say, if you want to know more about the commodities market, there is a lot more information available on our website, which is www.afexnigeria.com. And if you want to get started trading commodities, you can always download our app, which is available on iOS and on Android.
All right, Michael, thank you for that. So you recently closed out the FETC. Can you tell us a bit about the performance of the product and future plans for other innovative products on the exchange?
Thank you very much, Ladi, for that question. So we recently closed out, like you said, the Fair Trade Exchange Traded Commodity, which is something we have given a weekly update here on the commodities market summary. So the product itself was closed out at 16,800 naira per contract, and it started the commodity trading season and that's as far back as November 16th at 10,000. That would indicate a gain of 68%. I think that product has done significantly well. In comparison to all the other types of financial market products that we have, products that we have in the market. So I think it's safe to say that the way we designed the Fair Trade Exchange Traded Commodity, it was designed to lie at the intersection of spot contracts, which tend to be high risk, high return products, and then also fixed income products, which tend to be low risk, low return products. So this first iteration has extremely been successful, and we are hoping to continue listing the Fair Trade Exchange Traded Commodity on the exchange. As regards with regards to our future plans for the FETC, so we are looking currently into, we're looking to structure the product currently to either adding export nodes or also creating an entire FETC, which is based off of the export commodities that we have on the exchange.
So inflation figures were out yesterday. We see a tapering of the inflation, further tapering of the inflation. And how do you expect this to affect the commodities market?
Thank you very much, Ini, for that question. I think we have at different points in time spoken about the wide correlation between the commodities market and then also the inflation rate. So in recent weeks, we have seen a slight decline across board with some of the commodities that we have covered on the exchange. So I would say that the extent to which either the raw commodity, which would ideally be maize, soybean, paddy rice, or sorghum, is represented in the inflation, that's the CPI calculations, or the final product, which ideally would be cereals, is represented in the CPI calculations. I think we can expect that correlation to continue. So over the next 45 days, we do expect the prices of commodities to continue falling significantly, and we do also expect to see that represented in the inflation rate figures.
All right, so let's move on to another conversation now. The pandemic has disrupted an already fragile agricultural value chain in Nigeria, especially smallholder farmers' ability to produce, process, and distribute food this disrupts agricultural productivity and markets and negatively impacts livelihoods, especially among vulnerable households, women and youth. And one of the greatest limitations in the sector has been difficulty in obtaining financing across the value chain. With the increase in food deficit, the utilization of innovative funding instruments to help fund various parts of the sector and lead to its growth has become important now more than ever before. So my first question is, access to finance remains the major challenge here. So given that smallholder farmers' productions account for about 80% of total production at this point, it's supportive of credit access and traditional banks. And over the years, banks have shied away from credit extension to this sector. What do you think are alternatives to funding for the sector, and how can the sector be prepared to receive this?
So thank you very much, Ladi, for that question. So if you look at the raw numbers, historical lending to the agricultural sector is being less than 5%. And that number hasn't increased, improved significantly over the years. So as opposed to what commercial banks are currently shying away from, I think what is also important is that it's extremely important for us to be able to leverage, the broader capital market. So if you look at what has happened in the agricultural ecosystem in recent years, you would notice a proliferation of crowdfunding platforms, and these are essentially platforms that that help raise money from different people, and then use that money to invest in the commodities market, or maybe even the livestock market, whatever the case may be. So they raise money from the crowd, and then they essentially use that money to finance a bit of the production process. But as opposed to just the crowdfunding platforms that we have seen, I think what's more so important with regards to the direct correlation to the capital market would be financial market products. And you have seen an increase in that, particularly with some of the products that we have on the exchange. So what we have tried to do at AFEX Commodities Exchange is essentially to design financial market products that would essentially provide capital and financing across the entire agricultural value chain. So if you look at production, which is essentially farmers cultivating their commodities, we've been able to provide input notes for two consecutive years to the tune of billions of naira, which would essentially help us provide inputs and seeds to smallholder farmers when they're cultivating commodities in the earlier part of the year. I think also with regards to processing, we've been able to provide the asset-backed commercial paper program, which we've spoken about, to the tune of $50 million, to which we're also looking to provide that over the next commodity trading season. And I think also with regards to trade, we have mentioned that we have spot contracts, OTC fixed income, and then even exchange-traded commodity contracts on the exchange. So I think as opposed to just the crowdfunding platforms that we have seen, I think financial market products would also be extremely important, in essentially accessing finance with regards to the type of products that we can list on the exchange. I think those two things are particularly some of the things that we have been able to do, and some of the things that we essentially want to continue. With regards to what we can do in the ecosystem to sort of facilitate and increase in the number of those type of transactions or those type of financial products, I think the most important thing right now would be data. And data is essentially important in two ways. So first off, data provides visibility over what is currently going on. So you can essentially determine where, how, and when you want to play in the commodities market. And I think data is also essentially important in you assessing your risk when you want to play in the commodities market. With regards to commercial banks, I think right now a lot of the regulations with regards to how commercial banks can lend to the agricultural sector are a tad stringent. I think we can do a bit more work and innovation in that stead to sort of increase financing for the agricultural sector. I think lastly here would also be the farmer aggregation model, which NISA sort of helped develop, which is also something that we do on the exchange, and which is ideally to just essentially aggregate smallholder farmers into different groups as opposed to dealing with them on an individual basis. And what this does is that it provides better accountability and better visibility over what the average smallholder farmer is doing.
So how would you rate the innovations of commodity exchanges? And you've already mentioned some that you're working on, but any suggestion to unlocking financing, more financing in this space?
Thank you very much, Ini. So I think with regards to innovative products on commodities exchanges in general, I think a lot of work has been done in the past 2 or 3 years, but it still remains that a lot of work still needs to be done. I think the exchange's role, in being able to solve some of the critical problems with regards to the agricultural ecosystem is important. I think the exchange's role as regards, its ability to serve as an intermediary between people who want to buy commodities and sell commodities is also extremely important, and more so the ability, to formalize that entire transaction process is important. And, the way in which you do that is, by leveraging financial market products, which I've already mentioned before. But with regards to innovative financial products that could be developed, I think the most important one at the moment would be derivative contracts. So with regards to trading commodities in general, or maybe even trading commodities on the exchange, one thing is predominant in the mind of every single market participant, and that is risk. And so what derivatives allow you to do is that they allow you to essentially, transfer today's risk until tomorrow, or just completely edge your risk in the market. So I think with regards to innovative financial products that commodities exchanges could currently be developing, I think derivatives is key. I think derivatives is important. I think derivatives is a financial market products that could essentially drive, higher transaction volumes with commodities exchanges, thereby improving the entire agricultural ecosystem.
All right, so the public and private sector obviously have a role to play in closing food deficit. Could you identify, policy directions, and private roles to closing the food deficit?
So with regards to policy directions, I would like to emphasize on one that is currently a menace, with agriculture currently, and that is the Land Use Act. And there seems to be at the moment a lot of issues and problems and challenges with regards to how people own land, and then how that land could essentially be used. So I think a lot of innovation needs to be done in that regard with regards to land ownership. I think secondly would also be so when you think about innovation with regards to policy directions, I think the federal government has done a brilliant job with some of the innovations that they've come up with in recent years. Some of which would be the Anchor Borrowers Program, and then also the Presidential Fertilizer Initiative. But what is more so lacking at the moment would be the driving of the implementation of those particular programs, so that they essentially deliver, on the goals and objectives that they set out at inception. And I think that the way forward would essentially be a public-private partnership in essentially driving the implementation of all these initiatives. And I think one thing that is also important to mention here is we need to slowly transition from smallholder farming to large commercial farming, and to just use the United States as a proxy. So currently in the United States, only about 1.3% of the population currently cultivate crops. And if you look at the numbers in the United States, the average number of farms in the United States since the year 1935 has dropped from around 7 million farms to just around 3 million farms in today. And what that indicates is that the size of the average farmland has increased significantly over the years, and then the number of smallholder farmers has reduced drastically. I think it is the case that I know you mentioned this data earlier in the conversation, where you mentioned that smallholder farmers currently account for 80% of the production in the country. I think it's also safe to say that by virtue of the food deficits that we have experienced in the country over the years, it is safe to say that smallholder farmers cannot produce enough volume that we need in the country. So we do need to transition away from just smallholder farming to commercial farming. So any sort of policy that the federal government can put into place to facilitate that will also be extremely important.
All right, just before we let you go, you did talk about commercial banks, extending more loans to the agri sector. But how can they leverage on the innovative financing instrument that you talked about earlier?
Thank you very much, Ini, for that question. So I think as opposed to some of the financial market products that we have spoken about, which of course commercial banks can, participate in, whether that's the input note, or the spot contracts or the exchange traded contracts that they can participate in. With regards to lending to the agricultural sector, one thing is pivotal, particularly to commercial banks, and that's the idea of collateral, right? And that's the idea that any sort of person who wants to receive lending from the commercial banks must bring some sort of collateral to the table in order to access that type of financing. And at the exchange, we have developed the e-warehouse receipt system, which is essentially similar to a title deed that somebody who owns land would come and tender at the bank in order to receive financing. But what we have noticed in recent months is the fact that most commercial banks don't currently recognize the e-warehouse receipt, as a necessary collateral tender in order for smallholder farmers to access financing. So I think a lot more needs to be done with regards to that, either with regards to market education for the end of the commercial banks, and then also market education with smallholder farmers with regards to how they can leverage the e-warehouse receipts that they have to access financing from commercial banks. But I think the most important financial market product that can essentially help commercial banks start lending in significant amount and value to the agricultural ecosystem would be the e-warehouse receipt infrastructure.
All right, Michael, thank you so much for those ideas. Michael Martin is a portfolio manager at AFEX. Always great to talk to you. Thank you. We'll take a moment
Always
now.
great talking to you, laddie. Have a wonderful week.
You too. We'll take a moment now. And now to another conversation. 4 major international airport terminals and related services in Nigeria have been listed for concession. The federal government called for bid in the exercise of its airport concession policy and has released a request for qualification, working in compliance with the Infrastructure Concession Regulatory Commission and National Policy on Public-Private Partnership. The airports include Nnamdi Azikiwe International Airport, Murtala Mohammed International Airport, Lagos, Malam Aminu Kano International Airport, and Port Harcourt International Airport. The document indicates that the surrounding communities are intended to develop into efficient, profitable, self-sustaining commercial hubs, which will create more jobs and develop local industries through a public-private partnership arrangement. Well, we have Mr. Sheyi Adewale now, the Chief Executive Officer of Mainstream Cargo Limited, joining us now to share his thought. Great to have you.
Thank you, Channels TV, for having me.
Good morning. So what were your initial thoughts on this move by the federal government?
Yeah, my initial thoughts include, one, it's long overdue. It has been in the offing for a long time, and many governments have passed over it because of the challenge that they faced with the unions. So, and I believe as of now, this has been overcome, and we now expect that we will now have international airports that can compete favorably, and Nigeria can be the major hub in West Africa, because we're losing many businesses to Ghana, most especially when it comes to being the hub in West Africa, the favored hub. Also, what we expect is that our airport infrastructure will improve. We'll also believe that government will be true to its words, that the concessioning will be open, will be transparent, and at the end of the day, the nation will be better thereof. So the expectation is high, and we expect that Nigeria's perception when it comes to aviation will improve. So that's my initial thought, and it's a good move. If the Buhari administration is able to do this well, it will add to the impact they've made on Nigeria as a government. So that's basically what I have to say for now.
Okay, so you did say that you hope or you expect that the federal government would be transparent in handling this concessioning of the airports. When you say that, what do you hope to see in the plan that would convince you that it's transparent and is being done according to how it should be handled?
Well, it has to come with the end in mind. The first being that we want to see like a telecoms outcome, not the disco outcome. What do I mean by that? You can see the outcome that came out from the disco, the telecoms aspect, where the investors, MTN, Econet, and such companies at the outset, including Glo, invested real money, grew the business, and we could see the benefits thereof today. But we can't say the same thing for the discos, even though they have different kinds of model and the experience is completely different. Government still spends loads and lots of money into the discos to ensure that we have electricity, so to say. So we expect that when the outcome of this process is completed, we'll see a radical transformation, a good transformation, an excellent transformation of our airport system and industry. And that will really be a game changer for the aviation sector in Nigeria. So it must not be geared towards 2023, whereby government intends to settle scores or to settle some people to support them, or in that relation like we experienced in the past. Once it is open, once it is transparent, once they go through and perfect it, and we want to have like an Heathrow-like experience whereby there is real investment into the sector. You know, the Heathrow experience has investments from Qatar, from China, all over the world coming as a consortium to build what we have as Heathrow Airport today. So if we can replicate something like that, I'm telling you, the aviation industry will be something that will be worth commending.
All right, to make this plan impactful, what components do you expect the federal government to include?
There are many components actually that we'll want to improve. One is that if we use the Lagos International Airport, Mohammed International Airport as an example, even though government has spent a lot of money therein, it's still not up to par, you know, when it comes to the standardization of an main international airport for a country. So what we expect is that infrastructure will be fully upgraded, maintained. The cooling system has to be very good and efficient all around the airport. We expect the baggage system to work efficiently. We expect that the digital side of the business, ICT component, is up to par and up to speed and efficient. You remember, as of today, we have issues with the ticketing aspect of it, which is an ICT-related digital part of it. Also, we expect reduction in human interferences in airport facilitation processes. That means we have to have good signages, we have to have good information center, we have to have a whole lot of system that ensures seamless interaction. So we have to limit the human interaction when it comes to passenger facilitation or in our international airports. So that is another one. We want a very clean environment. You know, we expect that maybe the concessionaire, I don't know whether it's part of their scope, that the carbon emission aspect should also be looked at so that we have a clean, safer, good environment. So, yeah.
All right.
So we have a lot.
Yeah, we can see you have a whole lot of expectations, and we do hope that the federal government would consider those components, you know, in drawing up the concession plan for the airport. Mr. Shea Adewale is the Chief Executive Officer of Mainstream Cargo Limited, and he shared his thoughts with us on the plan by the federal government to concession some airports in the country. Thank you so much, Mr. Adewale, and enjoy the rest of your day.
Thank you.
So we'll take a break now. When we come back, we'll head straight to the markets. Do stay with us. Heading straight to the market now, we have Anitie Edits. Anitie, what's going on in the markets?
Yes, good morning, Ini. Let me say it's bullish sentiment for two of the markets. That's for the fixed income market and the equities market. But let me just bring you up to speed with what the transaction was yesterday. Bullish sentiment is what we had at the fixed income market, particularly at the bonds market, but it was only the 27th of March 2035 instrument that was traded there yesterday. 4 deals is what we had. Total value there, 1.40 billion naira. Moving over to the Treasury bills market, also bullish sentiment, number of deals traded there was 13. The highest was the 11th of August 2022. And of course, that reflects the strong investor demand as well as liquidity, in addition to a general expectation of sustained decline in interest rates over the near term. Now, let's move over to the open market operations, where we had just 1 deal there. Of course, it's not really been too active there. Number of deals, what 1.50 billion naira. For the CBN special bills, 30th of August, 10 deals carried out, worth about 20.6 billion naira. So it just tells you that there's much activity there about bullish sentiments, and then it's also coming a day after the National Bureau of Statistics released something that you might call a kind of a surprise headline inflation figure, because analysts or economic analysts were expecting the inflation figures to come at about 17.5, 17.54. But what the inflation figure, the headline inflation figure came out was at 11.38%. Of course, where the Debt Management Office will be carrying out its monthly auction today. That's for the primary market auctions, where although we'll get to talk to fixed income market analysts to bring us up to speed with what to expect at the markets there. So then over to the stock markets there. It also reversed the mild profit taking that we saw on Monday. So yesterday we gained about 24 billion naira. Then in percentage terms, that represents a 0.11% increase on the all-share index. Then 20 points, we're still within that 20 trillion naira mark in total market value. And then, of course, looking at the sectoral performance, not too good a picture there. It would have been a negative picture, save for the 3.3% increase on the share price of Dangote Cement. So that's what also lifted that market, 1.76%. That's what it printed. So besides that, the market would have gone into the negative territory, but save for the increase on Dangote's share price. So that has also increased the month-to-date gain to about 2.6%, and then reduced the year-to-date loss to about 1.8%. Now, also, when you take a look at the volume of transactions, it was in the red also. That fell to 21. It fell by 21.6%, and the deals not too much in contrast to what we had on Monday. But of course, we will be looking out to how the market pans out at the close of today, midweek trading sessions. Of course, we will be digesting some earnings report, as well as some other market information, which is expected to have an effect on stocks performance at the close of today's trading. So let's move over to the unlisted securities market. It was in the red yesterday. Of course, the number of stocks traded there was just about 5, which is an increase. Well, I think just about two stocks increase in contrast to what we had on Monday. And then we had 3 decliners: Double One PLC, Central Securities Clearing System, as well as Friesland Campina, WAMCO. That's where the profit taking took place, which made that market, that smaller stocks market, to go in the red at the close of Tuesday's trading sessions. And then the total volume there, not too much. It used to be in the millions, but as of yesterday was just a little over 440,000, worth about 14.53 million naira, and carried out in just about 12 deals there. So that just shows you that the market, it's not too, the smaller unlisted securities market, we've not really been reporting it there. But of course, some investors have their eyes out there. So now we will be looking at for when this today's trading. But now I was talking about the fixed income market. So let's bring in Chioma Udu, who is a fixed income dealer at GT Bank. Thank you for joining us, Chioma.
Thank you for having me, Anita. Good morning.
Okay, it's a pleasure. Now, the inflation figure, the July inflation figure, I'm sure, I don't know about you, but to me it came as a surprise at 17.38%. And then, of course, it also beat economic analyst forecast of around 17.5%, and marking the 4th consecutive decline. So what impact is this expected to have on yields at the fixed income market?
Well, the fixed income market has been quiet. The market, in fact, has been trading bullish because of moderation in rates across the yield curve. We have a bond option today. We expect that the focus, we expect that the market is going to be very bullish. The rate and that is going to moderate. And the DMO is offering 150 billion. We expect a bullish trend, and the rate will close lower than the last auction. The rates of the last auction were 12.35 at the 2028, 13.15 at the 2036, and 13.25 on the 2050. Because of the moderation of yields across the yield curve, we expect that rates are going to trend lower at the auction today.
Okay, so thank you, Choma, for giving us some information for the fixed income markets, and we'll be looking out for it. So, that's it. That's our review of the market, and of course, what to expect.
Yeah, well, it's good that the bull is back, especially in the equities, and we hope it stays there at least for a while. Thank you so much, Anita. Well, just before we head to the crypto market, let's see what's happening in the UK. UK inflation has slowed more sharply than expected in July, with the annual rate falling to 2% from 2.5% in June. Economists had penciled in a rate of 2.3%. Just like in Nigeria. It's the first easing in inflation since February, but economists say that the drop is likely to be temporary. Prices were unchanged between June and July, following a monthly gain of 0.4% in June. The biggest upward pressure came from transport costs, including higher petrol prices, along with price rises for second-hand cars compared with falls a year ago. The ONS says that demand for used cars had risen as the global semiconductor shortage held back the production of new cars. And there are fewer one-year-old cars coming to the market now because of a fall in new car registration. Well, let's head to crypto market now. We have Ladi standing by. Ladi, is the red still spinning?
Well, yes, the market is still red. Now, the confusion now is this the beginning of a bear market, or is this just a pullback and the continuation of the bull market? That's to be seen. We see Bitcoin, Ethereum, and major altcoins all in the red. Market cap is below the $2 trillion mark. 24-hour volume, $127.74 billion, up about 6.19%. Bitcoin dominance, 44.16. Price of Bitcoin, $45,323, is down about 0.93%. Let's take a look at top ultimate market cap now. I see BNB, $403. It's down about 3%. The biggest loser on this counter is Dogecoin at 30 cents. It's down 5.89%. And XRP, still above $1, still trying there. It's down 2.91%. Let's take a look at some IDO news now, because IDOs are hot right now. We have Babylon IO. That's the NFT marketplace for content creators. They are launching they'll be launching on a DEX today, Ape Swap, and that would mean right now the market is going to be listed after selling off their IDO for a record 3 days. It's looking good for IDOs at this point. It's another good way that capital is being raised in the crypto market. Let's look at the top 5 gainers. We have AVAX there, 25% up. AR, $25 up 23%. We have Near Protocol, it's $4.22, is up 12%. And QNT at $171.19, up about 11.41%. And we have Audio there. Audio, biggest loser there, down 27%. VGX, $3.75, down 9.39%. And Theta, one of the NFTs there. NFTs are really hot this year. They've performed well this year. Let's see how NFTs perform going forward. So, Ini, the market is not looking so bad. We still have Bitcoin not yet at 30K, so that's a good sign right now.
That's a good sign. Let's keep our fingers crossed. Well, that's it on the program today. Thank you so much for watching. I'm Ini John Meko. I do remember 1:30 Business Incorporated will be back with a development in the world of business.
And I'm Ladi Williams. Thank you for watching.